fall. Welcome back. You're watching Buy or Sell, and it is now time to discuss all your mutual fund queries. Let's welcome in our guests who will help answer all your questions. We have Anil Rego, he's CEO and founder of Rights Horizon, joining us from our Bangalore studios. Let's go straight to a query that we have. We have a call on the phone line. Anil, let's go to him. Murli is joining us from your city, that's Bangalore. Murli, good afternoon. What's your question?
Yeah, I have a query. I hold 1,200 units of Fidgety Equity Growth.
Hello. Right. You purchased this in 2007 and you're just about breaking even now. How much longer will you hold and what kind of returns are you expecting?
See, another 1 year if the market is good, but if it's too volatile, I would like to exit. I just want a suggestion on this.
All right. Anil, what's your view on Fidgety Equity Fund? Do you think this is one to keep, to hold on to for say another year or two, given that the last year has been quite tough for the markets, at least 2008 was, and even many mutual funds have made up for those losses in this year. Do you think this is going to be an outperformer in its class? Should he hold on? Should he switch to something else?
Sure. We like the Fidgety Equity Fund, and I think it's a good fund. The returns may not be as good probably because of his timing. Okay, so he may not have bought it at the, of course he has not bought it at the worst of times, but he's probably not bought it at the best of times. Now the fund has run up pretty sharply, so you know one has two options. If one wants to play a little safe, then maybe partially move something to debt and start a systematic transfer back maybe into the same fund. If he has a longer term perspective, I would think maybe 1 to maybe even 2 years, then I think one could just hold the fund right through there. In that case, you know, in case of a market fall at some time, one could buy either Fidgety Equity Fund or some other large cap funds, you know, on a market fall there. So that will help average out and, you know, take care of his returns as well.
Hi Anil, good afternoon. I'm going to go across to our next caller, and it's Vivek joining us from Mumbai. Vivek, go right ahead and ask your question to Anil.
Yeah, good afternoon, sir. I hold SGFC Top 200 for. I just started the SIP of $1,000. Second, I have iPro Discovery Plan. That is again a growth plan. And third one is Birla Sun Life Dividend Yield. That is also a growth plan. All I am investing 3,000 in 3 SIP. Just I wanted to confirm whether it is a good investment and how long I need to invest in this SIP.
Okay, Anil, he wants you to evaluate the investments that he's made. Should he hold on and stay where he is?
Sure. I would think that, you know, he's diversified across 3 funds. I think he has a conservative fund. You know, he has a combination. So I would probably want to, you know, look at a long-term SIP, maybe 2 years, 3 years, and, you know, ride through the volatility. Even if markets fall, you know, you're buying it at a better price. So I would, you know, just keep all of those funds. I think it's important to, you know, continue with that SIP for maybe a couple of years more, and I think that's when you'll actually see the, you know, returns on those funds there.
All right. Let's talk of NFOs now, Anil. DSP Blackrock is coming up with the World Mining Fund, and there's another one which is Fidelity India Value Funds. Would you recommend subscribe to both these NFOs?
Yeah, I think the Fidelity Value Fund is a good concept there. I think value investing in the long term we've seen has actually delivered, you know, good returns there. So up a little, so you know, I would be more comfortable, you know, investing through, you know, an SIP there. Of course, you know, it's a value fund, so one can even consider some parts of it in lump sum investments there. On the DSP mining fund, basically this is a feeder fund into, you know, another global fund of DSP Blackrock, which invests in mining companies. Now, you know, there has been a good run up in the commodity prices. We are pretty bullish on the commodity cycle as well in the long term, but you know, again there, this could see a lot of volatility there if markets do correct. So yeah, at least this one I would not do a lump sum, but you know, consider an SIP into the fund there. I think both of them are decent funds to, you know, look at for an investor.
Yeah, absolutely right, Anil. I was in conversation with the product manager right here on Profit for that DSP Blackrock World Mining Fund. And the real heart of the matter is how much more can commodities move up from here? That's the answer that nobody can answer conclusively. Well, let's move on to our next question, which has come in from a number of investors. They're saying, look, diversified schemes have done pretty well over the last year. So if you had to do diversified versus ELSS, where would you put your money, Anil?
Sure. Actually, I would look at them as two different categories. If you don't need tax saving, we always suggest that you don't do an ELSS fund. The reason is, it gives you a little more flexibility out there. Because let's say if markets are at a wonderful time and you've got fantastic returns, then we may just want to, take some money out of it, which, otherwise may not be possible. The second reason for that is also that, you may not be able to get out of a fund which is underperforming. Okay, so it's useful to have flexibility out there, and today without entry loads, I think one can stay in the best of funds and portfolios out there, and need not be bothered about exiting in the short term, and facing an entry load there. So I think I would always gun for diversified equity funds if you don't need the tax saving. Okay, but if you need the tax saving, then you don't get into a diversified fund, so you have to go for the ELSS out there. I think broadly you would find at some points diversified do better, at some points ELSS do better. So, in the long term, actually, it doesn't matter too much out there.
All right. But if you do not have a constraint of tax saving, Anil definitely prefers the diversified fund. Anil, tell us what are your top picks, because a lot of our viewers send us queries, especially on ELSS. But other than ELSS, the top picks there, large cap equity, balanced funds, what about small and mid cap funds as well as FMPs? Your top picks in these categories.
Sure. Maybe starting off with the ELSS, you will find that Sundaram tax saver, you will have HDFC tax saver. You can use some of them. I think the ICICI tax planner also is beginning to do well, so that can be considered. In the large cap, maybe one can look at DSP top 100, HDFC top 200 is there. Birla Sun Life Frontline Equity is a good fund there. In the mid cap space, you can have Sundaram Select Mid Cap. You can Reliance RSF is a very good fund out there, and you can basically ICICI Discovery Fund is also something that one can look at. Of course, you also have a small cap category there. So Sundaram Smile is a good fund, and IDFC small and mid cap is something that one can consider out there.
Right. When it comes to the debt side of things as well as gold, sure, what is your view there? Because the expectation is the RBI will start, raising rates. When should investors look at when should they look at fixed income products and gold? Do you think people have missed the bus when it comes to ETFs, or can they still buy?
Sure. I think in the long term, we are very bullish on gold. I think some of that is what just happened, and governments will start buying gold like India has done. I think China is also under pressure there to do exactly the same. So it's a typical dilemma for all central banks worldwide, and we think that there's no alternate to the dollar today, because there's a big fear that the dollar may depreciate. So central banks would like to see let me have some of the alternate there, and even if a small part of that goes into gold, then that's going to do well. So I think there's some bit of steam still left in gold. But I would still phase it out, because the rally has been really very steep there. So that is about gold. In terms of the debt market, I think one can look at fixed maturity plans, especially if you're a long-term debt type of investor there. You would also use a fund which is about 18 months of duration, so that it actually falls into the second financial year, what we call as a double indexation. So from a tax benefit, you're unlikely to pay too much of tax out there. So that is something which one could look at. Yes, inflation is likely to head up, upwards, because in the previous year, you suddenly found commodity prices and a lot of manufacturing goods actually fall down very sharply, and they started rising up somewhere from December to March. So you'll see inflation go up, and probably debt funds as well.
Anil, we're unfortunately right out of time. Thanks very much for joining us. Sure. with all your advice to the investors who join us regularly on Buy or Sell. It's a wrap on the show. The markets may be correcting, but boy, there are some interesting movers out there. And my attention is drawn to Tata Coffee, which is up 12-13%. But I'm going to leave all the market analysis to Samina and Bharat as they take over on Profit Newsroom.